One tweet, 4 words. $50 billion in market value created from nothing. On January 29, 2021, Elon Musk changes his Twitter bio to a single word, Bitcoin. Within 24 hours, Bitcoin surges 18%. The cryptocurrency market adds $111 billion in total value. Musk's personal holdings, estimated at 43,000 Bitcoin purchased for approximately $1.5 billion, gained $270 million overnight. 4 years later, those holdings are worth over $3.7 billion. He didn't invent a product. The T didn't build a factory. K changed 8 characters in a social media profile. K, but that's just the visible surface. Between 2019 and 2025, Elon Musk executes the most sophisticated market manipulation scheme in financial history, and he does it completely legally. He uses Tesla's balance sheet to pump Bitcoin. He deploys his 200 million Twitter followers as a distributed pump-and-dump network. He creates artificial demand for Dogecoin, a joke cryptocurrency with no utility, driving it from $0.002 to $0.73, a 36,400% increase in 4 months. It coordinates timing between Tesla announcements, personal tweets, and SNL appearances to generate billions in unrealized gains. And he does this while simultaneously claiming to champion financial democratization and mocking traditional finance. Here's what makes this extraordinary. Musk weaponizes something the SEC cannot regulate: his personal brand. When a hedge fund manager tweets about a stock they own, that's potentially illegal market manipulation. When Elon Musk does exactly the same thing with crypto, it's just his opinion. The regulatory gap between securities law and cryptocurrency oversight creates a legal loophole large enough to drive $50 billion through. He exploits it with precision that makes the Rothschilds look clumsy. The central contradiction defines the entire operation. Musk positions himself as the rebel fighting Wall Street corruption and democratizing finance for ordinary people. His followers believe he's on their side, the billionaire who speaks their language and fights their enemies. Meanwhile, he's executing textbook pump and dump schemes, coordinating market timing with insider knowledge and extracting billions from the very retail investors who worship him. He's built a cult of personality so powerful that his victims thanked him for the opportunity to lose money. We are going to trace the exact mechanisms he uses to move markets with tweets, the specific strategies he employs to time announcements for maximum personal profit, the coordination between Tesla, corporate actions, and his personal social media, speed patterns that reveal intent versus coincidence, and most importantly, the legal and regulatory failures that allowed this to continue openly while traditional market manipulation sends people to prison. This isn't a story about cryptocurrency. It's a story about how personal brand becomes the ultimate financial weapon in the attention economy. Khan's celebrity status creates market-moving power that transcends traditional financial leverage, and how the infrastructure of modern social media platforms has created opportunities for manipulation at scales previously impossible. Elon Musk didn't invent market manipulation. He just perfected it for the Twitter age and made it so entertaining that nobody calls it crime. May 2019, Elon Musk is already the richest person on Earth on paper, with Tesla stock valuation making him worth approximately $23 billion. But he has a problem. Most of his wealth is locked in Tesla equity. He cannot liquidate significant portions without triggering SEC scrutiny, shareholder lawsuits, and market panic. He's asset-rich but relatively cash-poor compared to his net worth. He needs a mechanism to generate liquid wealth without selling Tesla stock. Cryptocurrency becomes that mechanism. Entry into crypto isn't spontaneous. It's calculated preparation spanning years. In 2018, his companies are already experimenting with blockchain technology. The Boring Company sells 600 Boring Company hats in December 2017 and accepts Bitcoin as payment for some sales. This creates plausible deniability. He's not entering crypto to manipulate markets. He's just exploring innovative payment technologies for his businesses. But the real education comes from watching John McAfee, the antivirus software founder turned crypto promoter. Between 2017 and 2019, McAfee demonstrates the template: tweet about obscure cryptocurrencies, watch them pump, sell during the surge, repeat. McAfee explicitly offers coin of the day promotions. Transparently pump and dump schemes that generate millions before the SEC charges him with fraud in 2020. Musk observes and learns. McAfee's mistake was being too obvious in targeting small cap coins where manipulation is provable. Musk's innovation is to target large cap cryptocurrencies where his impact can be dismissed as legitimate market influence rather than manipulation. Bitcoin and Ethereum have trillion-dollar markets. When he moves those prices, it looks like an influential figure sharing opinions, not a fraudster running a scheme. The scale provides cover. His first significant crypto tweet comes on April 1st, 2019. Dogecoin might be my fave cryptocurrency. It's pretty cool. Dogecoin, created in 2013 as a literal joke, mocking crypto speculation, immediately surges 20%. This is the proof of concept. Musk has just demonstrated he can move a $300 million market with 12 words. He tweets Dogecoin multiple times over the next months, each time generating 10 to 30% price spikes. But here's the critical detail. In 2019, Musk has no disclosed Dogecoin holdings. He's testing the mechanism without personal financial stake. He's learning the timing. How fast do markets react? How long do pumps last? What tweet formats generate maximum impact? He's conducting market research using his 27 million Twitter followers as unwitting test subjects. The SEC investigates Musk aggressively for Tesla-related tweets during this period. In 2018, Musk tweeted funding secured about taking Tesla private, causing massive stock movement. The SEC charges him with securities fraud, forces him to step down as Tesla chairman, and requires pre-approval of Tesla-related tweets. This teaches Musk the crucial lesson. SEC authority over securities is absolute, but SEC authority over cryptocurrencies is effectively zero. In September 2019, Musk tweets an image of Dogecoin as a sandstorm engulfing the global financial system. Dogecoin jumps 17%. He's not promoting Dogecoin or recommending purchase. He's posting memes. The legal distinction is critical. Securities law prohibits pump and dump schemes where someone promotes an asset they secretly hold. But meme posting about crypto isn't promoting securities. It's just speech. Throughout 2019 and early 2020, Musk experiments with different tweet formats: direct statements, memes, polls, replies to other users. He's A/B testing market manipulation techniques in real time. He discovers that surprise timing generates larger pumps than scheduled announcements. That visual content outperforms text. That engagement with critics amplifies reach more than supportive replies. The education extends to understanding crypto market mechanics. Unlike stock markets with circuit breakers and trading halts, crypto markets trade 24/7 across hundreds of exchanges with no centralized oversight. Price movements can cascade globally within minutes. Coordinated buying on one exchange triggers automated trading algorithms across all exchanges. The infrastructure is built for maximum volatility. Musk also identifies crypto's unique demographic: young, male-dominated, anti-establishment, technologically optimistic, and desperate for wealth. These aren't diversified investors with balanced portfolios. They're seeking 10x returns who follow any narrative promising disruption. They want to believe a billionaire is on their side against traditional finance. Musk gives them that narrative. By December 2020, Musk has completed his market manipulation apprenticeship. He understands the mechanics, tested the techniques, and identified the legal boundaries. He knows he can move billions in market value with minimal personal effort. He's confirmed that crypto markets are essentially unregulated compared to securities. And he's cultivated a follower base that treats his tweets as financial gospel. Hey, now he's ready to deploy the strategy with actual capital at stake. Tesla is about to buy $1.5 billion worth of Bitcoin. Musk is about to execute the largest legal market manipulation in financial history. And he's going to do it so openly that calling it manipulation will sound like conspiracy theory. The apprenticeship is over. The operation begins. February 8th, 2021. Tesla files a SEC Form 1OK, revealing the company purchased $1.5 billion worth of Bitcoin in January 2021. The announcement triggers a 16% Bitcoin surge in hours. Bitcoin reaches $44,220, up from $38,100 before the announcement. Tesla's Bitcoin holdings gained $240 million in unrealized profit within 24 hours. This looks like a successful corporate treasury decision. It's actually the setup for the most profitable pump and dump cycle ever executed. Here's the mechanism that makes it genius. Tesla bought the Bitcoin in January 2021 when prices ranged from $32,000 to $38,000. The company acquired approximately 43,000 Bitcoin at an average cost of roughly $34,900. But they announced the purchase only after completing it in an SEC filing that legally must disclose material corporate actions. The announcement itself becomes the catalyst that pumps their investment. But the real sophistication is what Elon Musk did personally before Tesla's announcement. Throughout January 2021, Musk posted increasingly positive Bitcoin comments, changing his Twitter bio to Bitcoin on January 29th, tweeting in retrospect, "It was inevitable with Bitcoin memes." Each tweet moved Bitcoin prices 5 to 15%. He was softening the market, creating momentum that would amplify Tesla's announcement impact. The timeline reveals coordination. January 8th, Musk tweets positive Bitcoin commentary. January 11th to 12th, Tesla begins accumulating Bitcoin. January 29th, Musk changes his Twitter bio. Bitcoin surges from $32,000 to $38,000. February 4th, Musk tweets Dogecoin is the people's crypto, temporarily diverting attention. February 8th, Tesla reveals the Bitcoin purchase. Bitcoin explodes to $44,000. By February 21st, Bitcoin reaches $58,000. Tesla's Bitcoin holds unrealized gains exceeding $1 billion. This is textbook frontrunning, using private information about pending corporate actions to position markets favorably before announcements. If Musk bought Bitcoin personally, knowing Tesla would announce purchases, that's potentially illegal insider trading. The genius is that there's no paper trail proving Musk bought Bitcoin personally. He claims he owns only 0.25 Bitcoin. Whether that is true or whether he controls Bitcoin through shell entities is unknowable because cryptocurrency transactions are pseudonymous. But Musk doesn't need to own Bitcoin personally to profit. He owns 21% of Tesla. Every dollar of unrealized gain on Tesla's Bitcoin holdings increases Tesla's balance sheet value, which can justify higher Tesla stock prices. Between February 8th and February 21st, 2021, Tesla stock rises from $850 to $900, despite no operational changes in the car business. The Bitcoin gains are bleeding into Tesla valuation. Musk's net worth increases by approximately $8 billion in 2 weeks. The mechanism gets more sophisticated. On March 24th, 2021, Tesla announces it will accept Bitcoin as payment for cars. Bitcoin surges 5%. Musk tweets, "You can now buy a Tesla with Bitcoin." This creates the narrative that Bitcoin has utility, justifying higher valuations. Here's the twist. Almost nobody actually buys Teslas with Bitcoin. Between March 24th and May 12th, Tesla accepts perhaps 10 to 20 Bitcoin payments total. The policy is theater, creating perceived demand without real transaction volume. Meanwhile, Musk is actively managing the Bitcoin price through tweets to maximize Tesla's position. When Bitcoin dips below $50,000 in late March. Musk tweets supportive comments. When it approaches $60,000, he's silent, allowing natural profit-taking. He's essentially providing verbal support during dips and staying quiet during peaks. A pattern that benefits anyone holding Bitcoin long-term. The true brilliance emerges in April 2021. Tesla reports Q1 earnings on April 26. The company's automotive business made $438 million in profit, but $518 million came from selling 10% of its Bitcoin holdings. Tesla sold approximately 4,300 Bitcoin in March and April at average prices around $58,000, realizing $272 million in profit. Without the Bitcoin sale, Tesla's Q1 profit would have been only $166 million. Kazan's expectations and potentially tanking the stock. Kazan's tweets after earnings. No, you do not. I have not sold any of my Bitcoin. Tesla sold 10% of its holdings, essentially to prove liquidity of Bitcoin as an alternative to holding cash on balance sheet. This is misdirection, masquerading as transparency. It's technically denying personal sales while confirming Tesla sold. It's framing the sale as a liquidity test, not profit-taking, even though the timing to meet earnings targets is obvious. The psychology is perfect. Retail crypto investors interpret Musk, as I have not sold as commitment to Bitcoin. They don't focus on Tesla selling 10%. They hear their hero staying loyal. Bitcoin briefly dips on the Tesla sale news, but recovers quickly because Musk's personal commitment narrative dominates. Between January and April 2021. Here's what actually happened. Tesla spent $1.5 billion on Bitcoin, saw paper gains approach $1 billion. Sold 10% for $272 million profit, still holds 38,700 Bitcoin, worth approximately $2.24 billion at April 30th prices. The company turned corporate treasury management into a hedge fund operation, using Musk's social media influence to pump their own holdings. But Musk has created a problem he doesn't yet recognize. He's publicly positioned Tesla as a Bitcoin believer. He's told the world Bitcoin is the future of money. He's accepted it as payment for cars. He cannot suddenly reverse position without destroying credibility and triggering massive losses on Tesla's remaining Bitcoin holdings. He's locked himself into supporting Bitcoin regardless of his actual views, or so it seems. What nobody understands yet is that Musk is about to execute a reversal so spectacular it will generate even more profit than the pump. May 12, 2021. Elon Musk tweets, Tesla has suspended vehicle purchases using Bitcoin. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions. Bitcoin crashes 17% in hours, falling from $56,000 to $46,000. The entire cryptocurrency market loses $365 billion in value. Musk just destroyed more wealth than the GDP of Finland with a single tweet. But this isn't impulsive. This is surgical profit extraction, disguised as environmental conscience. Here's what makes it brilliant. Musk announced environmental concerns about Bitcoin in May 2021. Bitcoin mining's energy consumption was public knowledge in January 2021 when Tesla bought $1.5 billion worth. It was public knowledge in March when Tesla started accepting Bitcoin payments. The environmental impact didn't suddenly appear in May. What appeared in May was Musk's strategic need to exit his Bitcoin position without appearing to abandon his followers. The timeline reveals the setup. Between April 26 and May 12, Bitcoin trades in a range between $53,000 and $58,000. Tesla still holds approximately 38,700 Bitcoin worth $2.1 to $2.24 billion. Musk tweets supportive Bitcoin comments on May 7th and May 9th, maintaining market confidence. Then, on May 12th, without warning, he drops the environmental concern announcement. The crash is immediate and devastating. Within 3 hours, Bitcoin falls from $54,819 to $49,504. Leveraged Bitcoin futures positions get liquidated, triggering cascading margin calls. Retail investors who bought Bitcoin specifically because of Musk's endorsements watch their portfolios evaporate. Musk's Twitter mentions explode with betrayal, anger, and disbelief. But here is what nobody notices in the chaos. Tesla does unsell any Bitcoin during the crash. The company's Q2 2021 earnings report, released July 26, confirms Tesla still holds 42,902 Bitcoin, having actually added 4,200 Bitcoin during the May crash. Musk crashed the price, then Tesla bought more at discount. This is market manipulation textbook definition. Talk down an asset you hold, buy more at depressed prices, then support recovery. The environmental narrative is pure strategic fiction. Musk has no consistent environmental position. Tesla uses cobalt from African mines with devastating environmental and human costs. SpaceX rockets burn fossil fuels. Factories have environmental violations, but he uses environmental concerns selectively when it serves his Bitcoin market strategy. It's genius because it's unfalsifiable. How do you prove someone's stated concerns are insincere? The aftermath reveals the coordination. On May 13th, Musk tweets, to clarify speculation, Tesla has not sold any Bitcoin. Bitcoin partially recovers from $46,000 to $49,000. He's providing a floor, preventing complete collapse, because Tesla still holds billions worth. He wants the price depressed, not destroyed. On May 16th, he tweets support for Dogecoin, redirecting retail investor enthusiasm toward a different asset he can influence. The retail investors who followed Musk into Bitcoin are devastated. Many bought Bitcoin between $50,000 and $64,000 in March and April, encouraged by Musk's endorsements. The May crash puts them underwater. But Musk's Twitter feed fills with supporters defending him. He's just being honest about environmental concerns. Paper hands deserve to lose money. True believers will hold. The cult of personality is so complete that victims defend their victimizer. The financial impact on Musk personally is impossible to quantify precisely, but the structure is clear. Tesla's balance sheet takes unrealized losses as Bitcoin drops, but those reverse when Bitcoin recovers. Musk's 21% Tesla ownership means he has strong incentive to protect Tesla's Bitcoin value while also creating volatility he can trade around. If he controls Bitcoin through anonymous wallets, which is unprovable but plausible, the May crash let him accumulate more Bitcoin at cheaper prices. Between May and July 2021, Musk executes a masterclass in sentiment management. He tweets skeptically about Bitcoin on May 12th and May 16th. Bitcoin stays depressed. On June 13th, he tweets, Tesla will resume Bitcoin transactions when mining reaches 50% clean energy. Bitcoin rallies 9%. He's providing hope without commitment, maintaining influence without financial exposure. On June 20th, he tweets positively about Bitcoin Mining Council, another 5% rally. He's discovered something crucial. He can move Bitcoin prices in both directions with approximately equal effectiveness. Positive tweets create 10 to 20% rallies. Negative tweets create 15 to 20% crashes. This means he can generate volatility on demand, creating trading opportunities for anyone positioned to exploit the swings. The Supreme Court of the United States ruled in 1988 that market manipulation requires intent to deceive. Musk's defense is simple. He's just sharing his opinions, and market reactions aren't his responsibility. The Q2 2021 earnings revealed the full picture. Tesla reports $1.14 billion in profit, including $23 million in Bitcoin impairment charges. The company bought 4,200 Bitcoin during the May crash at average prices around $47,000. Tesla's total Bitcoin holdings are 42,902. Bitcoin purchased for approximately $1.58 billion, with unrealized gains of approximately $400 million by July 30th, when Bitcoin trades at $42,000. Musk crashed the price, bought the dip, and positioned for recovery. Perfect execution. The betrayal's long-term impact is what makes it sophisticated. Musk has broken Bitcoin's narrative momentum. Before May 2021, Bitcoin was on a trajectory toward $100,000, driven partly by institutional adoption that Musk symbolized. After May, that narrative fractures. Bitcoin peaks at $64,000 in April and doesn't exceed that level again until October 2021. Musk has personally arrested Bitcoin's bull run, giving him control over timing any recovery. But most importantly, the Bitcoin betrayal teaches his followers a crucial lesson. Musk's support is conditional and reversible. This actually increases his influence. If his support were permanent and unconditional, it would be priced in and lose market-moving power. By demonstrating he can withdraw support arbitrarily, he keeps markets responsive to every tweet. The betrayal isn't a mistake, it's a feature. It proves he can move markets in both directions, doubling his manipulation capacity. While Bitcoin crashes in May 2021, Dogecoin, the joke cryptocurrency Musk has promoted since 2019, is executing the most spectacular pump in crypto history. Between January 1st and May 8th, 2021, Dogecoin rises from $0.005 to $0.73, a 14,500% increase. Musk didn't create Dogecoin. He didn't develop its technology. He just tweeted about it 47 times in 4 months and turned a meme into a $90 billion market cap asset. This is pure alchemy, transforming attention into wealth. The Dogecoin strategy is brilliant because it targets a different demographic than Bitcoin. Bitcoin attracts institutional investors and libertarian ideologues. Dogecoin attracts Reddit users, gamers, and people who missed Bitcoin's early gains. These are gambling-oriented retail investors seeking life-changing returns. They're perfect manipulation targets, unsophisticated, motivated by FOMO, fear of missing out, and desperate to believe a billionaire cares about them getting rich. Musk's Dogecoin campaign begins in earnest on January 28, 2021, the day after GameStop peaks in the Wall Street Bets short squeeze. This timing is calculated. The GameStop phenomenon proved retail investors could coordinate to move markets. Tease is channeling that energy toward Dogecoin, an asset where his influence can direct outcomes because there's no fundamental value to contradict sentiment. On January 28th, Musk tweets, one word, Doge. Dogecoin surges 50%. On February 4th, Dogecoin is the people's crypto. Another 60% surge. On February 7th, he posts a collage of Dogecoin memes. The price hits $0.08, up from $0.007 on January 1st. He's posting without explaining, without analysis, just pure meme energy. And it's working spectacularly because Dogecoin has no fundamentals to analyze. It's pure sentiment. The mechanism is simpler than Bitcoin manipulation because Dogecoin has no serious investors analyzing environmental impact or regulatory risk. It's explicitly a joke. Everyone knows it's a joke. That's literally the appeal. Musk is pumping an asset whose value proposition is, wouldn't it be funny if the joke coin made us rich? Okay. This is peak postmodern finance. Irony as investment thesis. But here's where it gets sophisticated. Musk coordinates Dogecoin pumps with broader market attention events. On April 1st, 2021, he tweets, SpaceX is going to put a literal Dogecoin on the literal moon. Dogecoin jumps 20%. On April 16th, Dogecoin Day for 20th in month day format, a marijuana culture reference. He tweets Dogecoin memes. The price hits $0.42. On May 8th, he's scheduled to host Saturday Night Live, and he promises Dogecoin references. Dogecoin hits $0.73 before the show. The SNL appearance demonstrates Musk's understanding of event-driven trading. For 2 weeks before May 8th, Dogecoin rallies in anticipation that Musk will promote it on national television, creating explosive demand. He's essentially scheduled a pump. Tune in May 8th for Dogecoin publicity. Retail investors buy throughout April and early May, expecting the SNL appearance to trigger another surge. But Musk executes a perfect rug pull. During SNL on May 8th, he does mention Dogecoin, but in a weekend update segment where he's asked, "What is Dogecoin?" and responds, "It's a hustle." Dogecoin immediately crashes 30%. Retail investors who bought the rumor expecting to sell the news get annihilated. Musk has talked up an event. Let retail investors pump the price for him, then undercut them during the event itself. The psychology is devastating. Investors spent weeks buying Dogecoin because Musk would be on SNL. He told them it was coming. He memed about it. Then, at the moment of maximum attention, he calls it a hustle, market slang for a scam. The price collapses from $0.73 to 47 cents within hours. Everyone who bought expecting SNL to pump Dogecoin loses 30 to 40% instantly. But here's the criminal genius. Musk can plausibly claim he was just being honest. Hustle is ambiguous. It can mean scam or grind culture entrepreneurship. He was performing comedy on a comedy show. How can that be market manipulation? The legal cover is perfect. He schedules an event, creating market expectations, profits from the anticipatory pump, then delivers content that crashes the price, and it's all defensible as entertainment. The Dogecoin community's reaction reveals the cult dynamics. Instead of turning on Musk, they blame paper hands, weak investors who sold in media misinterpretation. Musk tweets May 9th, "If there's ever an official Dogecoin store, it should be called the Dogefather." Dogecoin partially recovers. The victims forgive him instantly. He's trained them to accept losses as tests of loyalty. Between May and December 2021, Musk continues sporadic Dogecoin pumps. May 20, working with Doge devs to improve system transaction efficiency, 20% surge. June 25th, baby Doge, do. He's now pumping a Dogecoin copycat. December 14th, Tesla will make some merch, buyable, with Doge, and see how it goes. 30% surge. Each pump follows the same pattern. Musk tweets, Dogecoin surges 20 to 40% within hours, then bleeds back down over days. Retail investors who buy during pumps lose money. Those who sell into pumps profit. Musk is creating a volatility machine where informed traders, those following him on Twitter with algorithms ready, can scalp profits from uninformed traders, those who see the tweets late or hold through reversals. The question everyone refuses to ask: does Musk own Dogecoin? He claims he owns a bunch, but provides no details. Given Dogecoin's anonymity and Musk's demonstrated willingness to move its price with tweets, the financial incentive to hold Dogecoin while tweeting about it is overwhelming. If he acquired 1 billion Dogecoin in 2019 when it traded at $0.002, costing $2 million, those holdings would be worth $730 million at Dogecoin's May 2021 peak. The probability that Musk repeatedly pumps an asset he doesn't personally hold is approximately zero. The probability that he acquired Dogecoin through anonymous wallets before beginning his public campaign is extremely high. But proving it requires tracing blockchain transactions to entities that are deliberately obscured without a subpoena and forensic blockchain analysis, which the SEC hasn't pursued for crypto manipulation. It's unknowable. By December 2021, Dogecoin trades around $0.17, down 77% from its May peak. Millions of retail investors hold Dogecoin at loss, hoping Musk will pump it again. He's created an army of bag holders financially dependent on his tweets. They cannot sell without realizing losses, so they must believe in eventual recovery. Musk controls them completely. Ali, they're not investors. Lee, they're hostages, cheering for their captor. The question is obvious. Why doesn't the SEC stop Elon Musk? The answer reveals the fundamental inadequacy of financial regulation in the social media age. Between 2018 and 2023, the SEC actively regulates Musk's Tesla-related communications while remaining effectively powerless over his crypto market manipulation. The regulatory structure designed for 20th century securities markets cannot address 21st century attention-based manipulation. The SEC's authority is clear and absolute for securities, stocks, bonds, options, and derivatives. When Musk tweeted funding secured about taking Tesla private in August 2018, the SEC charged him with securities fraud within 6 weeks. The settlement required Musk to step down as Tesla chairman, pay $20 million in fines, and submit Tesla-related tweets for pre-approval. The SEC's securities powers are comprehensive and enforceable, but cryptocurrency exists in regulatory limbo. The SEC argues that most cryptocurrencies are securities and thus subject to SEC authority. SEC Chairman Gary Gensler states repeatedly that crypto platforms should register with the SEC. However, major cryptocurrencies like Bitcoin and Ethereum are classified as commodities by the CFTC Commodity Futures Trading Commission, not securities. The jurisdictional confusion creates enforcement paralysis. Dogecoin's status is even murkier. It's not sold through an ICO initial coin offering that would clearly make it a security. It has no company behind it issuing shares. Key, it's decentralized code with no profit expectations from a specific entity's efforts, the Howey test standard for securities classification. He's arguably promoting a commodity, not a security. The SEC Securities Fraud Authority doesn't clearly apply. Even if the SEC had jurisdiction, proving manipulation requires demonstrating intent to deceive. When Musk tweets, Dogecoin, is he manipulating markets or expressing an opinion? Securities law allows people to promote stocks they own as long as they disclose ownership and don't make fraudulent claims. Musk's Dogecoin tweets make no specific value predictions. They're memes, jokes, and vague endorsements. Proving fraudulent intent is nearly impossible. The regulatory gap gets wider with disclosure requirements. SEC rules require corporate insiders to disclose stock trades within 2 business days, but cryptocurrencies have no insider reporting requirements. Musk can buy or sell Bitcoin, Dogecoin, or any crypto without disclosure. The transparency that prevents securities manipulation doesn't exist in crypto markets. He can accumulate positions, pump prices, and sell without anyone knowing. The SEC attempts indirect regulation through Tesla. When Tesla buys Bitcoin, that's a material corporate action requiring disclosure in SEC filings. The February 2021 revelation of Tesla's Bitcoin purchase came through an SEC Form 10-K, but this only captures corporate holdings, not Musk's personal positions. And it's backward-looking. Tesla discloses after buying, not before, allowing the announcement itself to pump the price. In July 2021, Democratic Senator Elizabeth Warren writes to SEC Chairman Gary Gensler, asking for investigation of Musk's crypto tweets. The SEC acknowledges receipt, but takes no public action. In August 2021, a group of Dogecoin investors files a lawsuit against Musk, alleging pump-and-dump manipulation. The case drags through courts for years without resolution. The legal system isn't equipped to address tweet-based market manipulation at speed. The CFTC, which regulates commodities, including Bitcoin, has authority over fraud and manipulation, but limited enforcement resources. Between 2015 and 2023, CFTC brings approximately 30 crypto-related enforcement actions, mostly against small platforms and fraud schemes. They don't target Elon Musk. Taking on the world's richest person with unlimited legal resources and a devoted social media following is institutional suicide for an agency with 700 employees and a $300 million budget. International regulation is even weaker. Crypto trades globally across hundreds of exchanges in dozens of jurisdictions. Musk's tweets affect Korean, Chinese, European, and American markets simultaneously. No single regulator has global authority. Even if the SEC prosecuted Musk successfully, that wouldn't prevent his tweets from moving markets on non-US exchanges. The regulatory arbitrage is structural. The irony is brutal. The SEC forces Musk to get tweets about Tesla pre-approved, but he can tweet about crypto markets with total impunity. Moving more money with crypto tweets than Tesla announcements. The settlement meant to constrain his market influence only redirected it toward less regulated assets. The SEC's intervention made Musk's manipulation more profitable by pushing him into crypto where he faces no oversight. Musk understands this perfectly. In April 2021, he changes his Twitter title to Techno King of Tesla, mocking the CEO title that came with SEC oversight. In May 2021, he tweets a meme mocking the SEC directly, openly taunting the agency that supposedly regulates him. And the SEC does nothing because his crypto activity falls outside their enforcement authority. The deeper problem is definitional. What is manipulation in the age of social media influence? When Kim Kardashian promotes a product on Instagram, is that advertising or manipulation? When Elon Musk shares opinions about crypto on Twitter, is that investment advice or casual commentary? The law distinguishes based on security status, but that's arbitrary. The market impact is identical whether the asset is classified as a security or a commodity. The current regulatory framework assumes manipulation requires deception, lying about fundamentals, creating false trades, or coordinating illegal schemes. But Musk manipulates through truthful statements and legal actions executed with calculated timing. He doesn't lie about Bitcoin's technology. He selectively emphasizes environmental concerns at opportune moments. He doesn't falsely claim Dogecoin has utility. He posts memes everyone knows are jokes. The manipulation is in timing and attention direction, not factual deception. By 2023, SEC has achieved nothing substantive against Musk's crypto manipulation, despite it being the most visible market manipulation in financial history. They've sent warning letters, opened investigations that go nowhere, and watched helplessly as he continues moving billions with tweets. The agency, designed to prevent 1929-style pump-and-dump schemes, cannot address Twitter-age attention manipulation. Musk has proven that regulatory structures built for centralized securities markets fail completely when applied to decentralized crypto markets influenced by social media personalities. The empire is built on regulatory obsolescence. November 2021, Bitcoin reaches $69,000. Dogecoin trades at 28 cents. And Elon Musk's net worth peaks at $340 billion, making him the wealthiest person in human history. His crypto manipulation has directly contributed billions to this total. Tesla's Bitcoin holdings are worth approximately $3.2 billion, with unrealized gains exceeding $1.5 billion. If Musk holds Bitcoin and Dogecoin personally through anonymous wallets, which is probable but unprovable, those holdings could be worth $2 to $5 billion. This is the apex of the attention to wealth alchemy. The daily operations at this scale are staggering. Musk's Twitter account has 66 million followers in November 2021. Every tweet reaches millions instantly. Financial media monitors his account 24/7, creating secondary amplification. When he tweets about crypto, Bloomberg, CNBC, Reuters, and dozens of publications immediately report it, multiplying the reach. He's created a distributed media empire where his social media posts become global news instantly. The market impact is quantifiable and enormous. Analysis of Bitcoin price movements between January 2021 and November 2021 shows Musk-related tweets correlate with 47 distinct price surges, averaging 12%. Dogecoin shows 63 Musk tweet-related surges, averaging 23%. Total value created across these movements exceeds $800 billion in gross market cap increases, though much of this is temporary. The infrastructure supporting this is minimal. Musk, a smartphone, and Twitter. There are no research teams, no compliance departments, no disclosure officers. He doesn't consult analysts before tweeting. He doesn't coordinate with Tesla's legal department. He just tweets based on personal whim or strategic calculation, and markets worth trillions react. The leverage ratio is incomprehensible. Zero operational costs, generating billions in market impact. Political influence flows naturally from financial dominance. October 2021, Musk tweets a poll asking, "Should I sell 10% of my Tesla stock?" It receives 3.5 million votes. This is performance art disguised as corporate governance. CEOs don't determine stock sales through Twitter polls, but Musk is demonstrating that his followers believe they participate in his decisions. The poll creates the illusion of democratic input, while Musk maintains total control. The Dogecoin community by November 2021 is a quasi-religious movement. Subreddits with 2.3 million members discuss Musk as the dog's father. They create memes portraying him as a savior of retail investors. They attack critics as haters and no-coiners. Musk has cultivated a personal army of retail investors who defend him reflexively and attack his enemies coordinated through social media. This is unprecedented. A billionaire with a grassroots populist movement. Terror diversification has expanded beyond Bitcoin and Dogecoin. Musk tweets about other cryptocurrencies, occasionally testing his influence across markets. He tweets about baby Dogecoin in June 2021, creating a 2,000% pump in that copycat coin. He tweets about Shiba Inu, another Dogecoin imitator, generating significant volatility. K's proven his market-moving power extends to virtually any crypto asset he targets. The dependency network is complete. Crypto exchanges profit from trading volume Musk generates. K's tweets create volatility that drives transaction fees. Financial media depends on Musk content to generate clicks. Crypto journalists monitor his Twitter feed as their primary source. Retail investors base trading strategies on interpreting Musk tweets. He's become essential infrastructure for the crypto industry, despite holding no official position in any crypto company. Compare this to nation-states. Musk's ability to move global markets exceeds most countries' economic influence, and the President of the United States makes economic policy announcements. Markets move. But presidential statements go through official channels with preparation and coordination. Musk tweets from the bathroom at 3 a.m. and moves billions. The Federal Reserve employs 23,000 people to manage monetary policy. Musk manages comparable market impact alone. The social influence extends beyond finance. Musk's Twitter persona combines memes, personal opinions, corporate announcements, and market manipulation seamlessly. Followers can't distinguish which tweets are jokes and which are strategic communications. This ambiguity is the weapon. When everything is potentially ironic, nothing is definitely serious. When every statement could be a joke, there's no ground for criticism. He's operating in pure postmodern communication, where sincerity and irony are indistinguishable. Cultural institutions respond to Musk's influence with confusion. Financial media doesn't know whether to treat him as a visionary entrepreneur or market manipulator. Regulatory agencies can't decide if his tweets are protected speech or fraud. Retail investors can't determine if he's their champion or their predator. The ambiguity protects him because taking a definitive stance requires certainty that the evidence doesn't support. The warning signs of unsustainability are visible but ignored. Bitcoin's 2021 rally is fragile, dependent on continued institutional adoption and regulatory tolerance. Dogecoin's price is pure sentiment with no fundamental support. Tesla's stock price includes crypto gains that are unrealized and volatile. His personal wealth is mostly Tesla equity that could collapse if crypto losses damage Tesla's balance sheet. The empire is built on attention and confidence, both fundamentally unstable. But in November 2021, these warnings are dismissed. Musk is the richest person alive. Coin is approaching $70,000. Dogecoin holders believe $1 is inevitable. Tesla stock trades at $1,200. The narrative is unstoppable momentum. Musk has proven that attention converts to wealth. Social media influence equals financial power. Personal brand transcends traditional business fundamentals. The emperor has infinite clothes, and everyone sees them. The peak is complete. The reversal is beginning. November 2021 to November 2022, cryptocurrency markets enter a brutal bear cycle. Bitcoin falls from $69,000 to $16,000, a 77% collapse. Dogecoin crashes from $0.8 to $0.06, an 80% decline. The total crypto market cap drops from $3 trillion to $800 billion. Elon Musk doesn't try to stop the decline. He adapts his strategy to profit from the collapse while maintaining cult loyalty. This is the true test of his manipulation mastery. The first adaptation is radio silence between November 2021 and March 2022. Musk's crypto tweets decrease from 15 to 20 per month to 2 to 3 per month. He stops pumping. This is strategic. In a bear market, pumps don't work because there's no liquidity to absorb buying pressure. Retail investors are tapped out. Institutional money has fled. Tweeting positive content would just highlight his inability to reverse the trend, but he doesn't stay completely silent. In May 2022, as Bitcoin falls below $30,000, Musk tweets, "I haven't sold any of my Bitcoin." This is the crucial psychological move. He's signaling commitment without trying to pump. He's telling followers, "I'm suffering with you," while actually protecting his reputation for future pumps. When crypto recovers, he needs credibility to move markets again. Maintaining the narrative of shared suffering preserves that credibility. Tesla's Bitcoin holdings create a problem during the bear market. Between November 2021 and June 2022, Bitcoin's price decline puts Tesla's 42,902 Bitcoin position underwater. Tesla bought at average prices around $34,000. By June 2022, Bitcoin trades at $20,000. Tesla faces approximately $600 million in unrealized losses. This threatens quarterly earnings reports and could force asset impairment charges. In July 2022, Tesla reveals it sold 29,060 Bitcoin, approximately 75% of holdings in Q2 2022, generating $936 million in cash at average prices around $28,500. This means Tesla sold as Bitcoin fell from $40,000 in April to $20,000 in June, likely getting average prices around $28,000 to $30,000. The company lost approximately $170 million on the Bitcoin it sold, but avoided larger losses if prices continued falling. Musk's explanation is masterful misdirection. Scroll. On July 20th, 2022, during the earnings call, he states, "We sold a bunch of our Bitcoin holdings, and the reason for that was we were uncertain as to when the COVID lockdowns in China would alleviate." Cool. So it was important for us to maximize our cash position. This frames the sale as COVID-related cash management, not crypto strategy. E. Avoiding the obvious truth. Tesla sold Bitcoin because it was losing money and the bear market showed no sign of ending. T. But the genius is what he does and say. He does and condemn Bitcoin or announce Tesla is exiting crypto permanently. He leaves the door open for repurchasing. On the same call, he adds, "This should not be taken as some verdict on Bitcoin. We are certainly open to increasing our Bitcoin holdings in future." He's selling while signaling potential future buying. This prevents the sale from being interpreted as bearish, which would tank prices further and hurt his remaining holdings. The Dogecoin strategy during the bear market is even more sophisticated. As Dogecoin falls from 28 cents in November 2021 to 6 cents by June 2022, Musk doesn't abandon it. Instead, he maintains low-level support with occasional tweets. January 14, 2022, Tesla merge viable with Dogecoin. Small 15% pump. May 27, 2022, he mentions Dogecoin during an interview. Another 10% rally that fades within days. These tweets serve multiple purposes. First, they prevent Dogecoin from going to zero, which would destroy his credibility and eliminate a future manipulation vehicle. Second, they maintain cult engagement without requiring him to pump aggressively. Third, they test how much influence he retains during the bear market. The answer, less than during the bull market, but not zero. He can still create 10 to 20% bounces, just not sustained rallies. The broader crypto winter also eliminates competition for attention between November 2021 and November 2022. Multiple crypto projects collapse. Terra implodes in May 2022, wiping out $60 billion. Celsius Network freezes withdrawals in June 2022, destroying $20 billion. Three Arrows Capital goes bankrupt. FTX collapses in November 2022, evaporating $32 billion. These disasters dominate crypto news, diverting attention from Musk's manipulation. Musk uses this chaos strategically. He never defends the collapsing projects. He doesn't try to support broader crypto credibility. He stays silent, letting the industry burn, because the destruction eliminates competitors for influence. When crypto eventually recovers, fewer platforms and personalities will have credibility. Musk's silence preserves his reputation, while rivals destroy themselves. The transformation Musk executes during the bear market is rhetorical. He shifts from crypto revolutionary to free speech absolutist. In April 2022, he announces a bid to buy Twitter for $44 billion. This dominates his public persona for months, drowning out crypto discussions. He's repositioning himself away from crypto without explicitly abandoning it. When he eventually completes the Twitter acquisition in October 2022, his public identity is primarily Twitter owner rather than crypto influencer. This repositioning is genius because it's reversible. Musk hasn't condemned crypto or sold all Bitcoin. It's just shifted attention focus. When crypto markets recover, he can shift back seamlessly. The flexibility maintains optionality. He can pump crypto when profitable and ignore it when inconvenient. The bear market teaches him that attention is more valuable when deployed selectively rather than constantly. By November 2022, crypto markets have bottomed. Bitcoin trades at $16,500. Dogecoin sits at $0.08. Tesla holds 9,842 Bitcoin worth approximately $163 million. Musk's crypto manipulation has survived the bear market by adapting, selling strategically, maintaining minimum support, diversifying public attention, and preserving credibility for future operations. The empire contracted but didn't collapse. The strategy is confirmed. Manipulation works in both bull and bear markets if you control the narrative and time your actions to minimize reputational damage. The winter is ending. The next pump is being prepared. The greatest threat to Elon Musk's market manipulation empire isn't regulation or crypto crashes, it's his own ego. In October 2022, Musk completes his $44 billion acquisition of Twitter, the platform that gave him his market-moving power. Within months, he systematically destroys the very tool that made his manipulation possible. This is the tragic flaw in action. The weapon that built the empire becomes the vulnerability that threatens it. The acquisition itself is a masterclass in buyer's remorse turned into attempted escape. Musk offers $54.20 per share for Twitter in April 2022. It's a 420 joke reference to marijuana culture. The offer is 38% above Twitter's market price. Within weeks, tech stocks crash as interest rates rise. Musk realizes he's overpaid catastrophically. He attempts to back out, claiming Twitter lied about bot prevalence. Twitter sues to enforce the agreement. Delaware Chancery Court rules Musk must complete the purchase. He pays $44 billion for an asset probably worth $25 billion in October 2022 markets. But the overpayment isn't the fatal flaw. The flaw is what Musk does after acquiring Twitter. He has purchased a platform that gave him unprecedented ability to manipulate markets. The rational strategy is obvious: preserve Twitter's functionality, maintain its user base, and continue using it to move markets. Instead, he deliberately destroys its value and functionality through ego-driven mismanagement. November 2022, Musk fires approximately 75% of Twitter's staff, reducing headcount from 7,500 to roughly 1,900. He eliminates most content moderation, trust and safety teams, and engineering infrastructure. His stated logic is cost-cutting and promoting free speech absolutism. The actual effect is catastrophic platform degradation. Critical systems break, spam explodes, advertisers flee. The platform that was worth perhaps $25 billion in October 2022 is worth maybe $15 billion by December 2022. December 2022, Musk bans multiple journalists and then unbans them after backlash. He promises not to make major policy changes based on polls, then does exactly that repeatedly. He suspends accounts, reverses suspensions, and creates chaos in moderation policy. Trust in the platform as a reliable communication medium collapses. When trust collapses, so does the influence of communications sent through the platform. Here's the structural problem. Musk's market manipulation requires Twitter to function as a credible, widely trusted platform. When he tweets about crypto, markets react because millions of users see the tweet. Financial media covers it, and the information spreads globally. But this only works if Twitter's infrastructure reliably delivers messages to followers. If the algorithm breaks, if spam drowns legitimate content, or if users abandon the platform, Musk's tweets reach fewer people with less impact. Between November 2022 and September 2023, Musk makes multiple changes that directly undermine his manipulation infrastructure. He ends Twitter's API access for many third-party apps, reducing the ways people access Twitter content. He implements aggressive rate limiting, preventing users from viewing more than 600 tweets per day in July 2023. He rebrands Twitter to X in July 2023, confusing users and destroying brand recognition built over 17 years. The ego-driven decisions accelerate. Musk argues with users constantly, getting into petty disputes with critics who have 200 followers. He tweets 100+ times per day, drowning his important communications in noise. When every tweet is potentially significant because Musk might be signaling market movements, but he's tweeting constantly about random topics, the signal-to-noise ratio collapses. Crypto traders can't distinguish manipulation from shitposting. So the impact on his market-moving ability is measurable. In November 2021, a Musk crypto tweet would typically move Bitcoin 8 to 15% within hours. By September 2023, similar tweets move Bitcoin 2 to 4%. Dogecoin shows similar degradation. November 2021 tweets create 20 to 30% pumps. September 2023 tweets create 5 to 10% pumps. He's literally destroyed 60 to 70% of his market influence through Twitter mismanagement. The financial losses are staggering. Musk borrowed approximately $13 billion to fund the Twitter acquisition. This debt requires roughly $1.2 billion in annual interest payments. Twitter's advertising revenue collapses from approximately $5 billion annually in 2021 to perhaps $2.5 billion in 2023 as major advertisers flee. The company is burning cash to service debt while revenue craters. Musk is subsidizing Twitter losses with wealth from Tesla and SpaceX, but the deepest flaw is psychological. Musk cannot tolerate criticism or admit mistakes. When advertisers leave Twitter because of content moderation failures, he doesn't fix moderation. He tweets, "Go fuck yourselves," to advertisers at a public conference in November 2023. This is pathological self-sabotage. He's telling the customers whose money keeps Twitter viable to fuck themselves. The emperor is naked and screaming at people pointing this out. The Twitter destruction teaches the crucial lesson. Musk's genius at manipulating attention becomes stupidity when ego overrides strategy. He built an empire by controlling information flow through Twitter. He's destroying that empire by making Twitter unusable, because admitting he overpaid and managing it competently would require humility. The fatal flaw isn't external opposition, it's internal. He cannot separate his identity from his assets, so attacks on Twitter feel like attacks on him, triggering irrational defensive responses. By December 2023, experts value Twitter X at approximately $12 to $15 billion, down from the $44 billion Musk paid. It's destroyed $29 billion of value in 14 months through mismanagement. More importantly, he's degraded the tool that made his crypto manipulation possible. He can still move markets with tweets, but the impact is diminishing. The platform's decline is accelerating. The weapon is breaking in his hands, and he's too proud to stop hitting himself with it. The irony is complete. Musk bought Twitter to preserve his free speech, which really meant preserving his ability to manipulate markets without platform moderation interfering. But by freeing Twitter from content standards, he destroyed its value as communication infrastructure. He's learning the hard lesson. Platforms need trust to function. Trust requires standards, and standards require moderation. The absolute freedom he demanded destroys the platform's utility. The fatal flaw is the belief that he can break the rules of platform management because it's Elon Musk. The rules break him instead. 2024 brings the consequences Musk's ego created. Between January and December 2024, his crypto influence continues degrading. Twitter X bleeds users and revenue, and the manipulation empire faces its first serious legal challenges. The unraveling isn't a sudden crash, it's gradual erosion of power through accumulated consequences. The emperor is still rich, but the empire is crumbling. The crypto market recovers in 2024. Bitcoin rallies from $16,500 in November 2022 to $73,000 by March 2024, driven by anticipation of Bitcoin ETF approvals. This should be Musk's moment to reassert influence. But his tweets during the rally barely moved markets. March 5th, 2024, Musk tweets positively about Bitcoin. Price increases 2%, then reverses. March 14th, Dogecoin tweet, 6% pump that fades in hours. His manipulation capacity has degraded to near irrelevance. The cause is simple. Crypto traders have learned Musk's tweets no longer predict sustained moves. Between 2021 and 2023, algorithmic traders made fortunes by buying within seconds of Musk tweets and selling minutes later. But by 2024, this strategy stops working because everyone knows the pattern. When everyone front-runs the front-runners, the price impact collapses. Musk has trained markets to ignore him through overuse. Tesla's crypto position continues deteriorating. The company still holds approximately 9,842 Bitcoin purchased for approximately $330 million at March 2024 peak of $73,000. These are worth $718 million, showing unrealized gains. But Tesla doesn't sell during the peak. By May 2024, Bitcoin drops to $62,000. The unrealized gains shrink to $280 million. Tesla missed the exit. The legal challenges accelerate. In August 2024, the Dogecoin manipulation lawsuit filed in 2021 proceeds to discovery. Musk's legal team argues he cannot be held liable for joking about crypto on social media. Plaintiffs argue his tweets constitute intentional market manipulation for profit. The case drags through courts without resolution, but the discovery process forces disclosure of some internal Tesla communications about crypto strategy. The revealed documents show Tesla executives discussing timing announcements for maximum market impact. This is evidence of manipulation intent. Twitter X's decline continues catastrophically. By September 2024, daily active users have fallen approximately 15 to 20% from pre-Musk acquisition levels. Advertising revenue is down 60% from 2021 peaks. Musk implements desperate measures, charging for API access, requiring payment for verification, pushing subscription services. None generate significant revenue. The platform burns approximately $3 billion per year, including debt service. Musk's response to Twitter's failure is to double down on chaos. October 2024, he uses X Twitter to promote political candidates explicitly, abandoning any pretense of platform neutrality. He posts over 200 tweets some days, making his account an unusable firehose of content. He argues with users who have tiny followings. He shares conspiracy theories. He's transformed his account from a market manipulation tool into a personal blog read by decreasing audiences. The human toll becomes visible. Retail investors who bought Dogecoin at 0.60270 cents in May 2021 have watched their holdings lose 85 to 90% of value. Many held because Musk said he wouldn't sell. He never explicitly told them to sell. He just stopped pumping. They're left holding bags with fractions of purchase prices, financially ruined, while Musk's net worth remains in hundreds of billions. The crypto industry's relationship with Musk sours. Between 2021 and 2023, crypto executives courted Musk, hoping his endorsements will legitimize their projects. By 2024, they recognize he's a liability. When he tweets about crypto projects, they often decline afterward. His association has become toxic. The influencer who could make fortunes with tweets now destroys value by mentioning assets. The political consequences emerge. Explicit political activism on X Twitter in 2024 triggers regulatory scrutiny. The EU threatens to ban X Twitter for content moderation failures. Brazil temporarily suspends X in August 2024 for refusing to comply with content removal orders. Musk's free speech absolutism creates conflicts with governments whose regulations affect his other businesses. The Tesla connection becomes dangerous. Tesla sells cars in Europe and China, regions where Musk's political tweets and platform mismanagement are creating regulatory hostility. In November 2024, European officials discussed potential Tesla import restrictions, partly motivated by Musk's X Twitter behavior. He's risking his profitable electric vehicle business to maintain control over a money-losing social media platform. The irrationality is complete. By December 2024, the Empire State is stark. Twitter X is worth perhaps $12 billion, down 73% from purchase price. Crypto influence is diminished to near zero. Legal cases are pending. Tesla's Bitcoin holdings are volatile and controversial among shareholders. Its net worth remains over $250 billion, primarily from Tesla and SpaceX valuations. But the manipulation infrastructure is destroyed. The unraveling reveals the fundamental weakness. Musk's power was always dependent on Twitter functioning as credible infrastructure and markets believing his tweets predicted sustained moves. He destroyed Twitter through ego-driven mismanagement. Markets learned his tweets are tradable noise, not signals. The emperor still has clothes, but nobody's looking anymore. The attention has shifted. The influence has faded. The manipulation continues, but barely works. The lesson is brutal. Manipulation through attention requires maintaining the attention mechanism. Musk built power through Twitter, then broke Twitter, then wondered why power decreased. He couldn't separate the tool from his identity, so defending the tool through competent management felt like submission. He chose pride over functionality. The empire survives in degraded form, but the peak is permanent history. The unraveling isn't finished, but the trajectory is irreversible. January 2025. Elon Musk's crypto manipulation empire is diminished but not dead. His net worth fluctuates around $300 billion. Bitcoin trades near $100,000. Dogecoin sits at 35 cents. Musk still tweets, still moves markets occasionally, still commands attention. But the game has changed. What Musk pioneered, the weaponization of social media influence for market manipulation, has become the standard playbook for attention economy grifters. He created the template, now everyone is using it. The pattern Musk established is now universal among crypto influencers. Step 1. Build social media following through controversial takes and memes. Step 2. Accumulate position in low liquidity asset. Step 3. Pump the asset through tweets while denying ownership. Step 4. Sell into the pump. Step 5. Deny manipulation and blame paper hands. This cycle plays out thousands of times daily across crypto markets. Modern examples are everywhere. Crypto influencers with 500,000 Twitter followers run Musk's playbook on smaller assets. They pump microcap coins, generate 100 to 500% rallies, and extract millions, while retail investors lose everything. The difference is scale. Musk moved billions. Influencers move millions, but the mechanism is identical. Musk proved it works. Imitators copied it. The innovation diffused. Celebrity crypto endorsements follow Musk's template. Kim Kardashian promotes Ethereum Max in 2021, gets charged by SEC in 2022, pays $1.26 million in fines. Floyd Mayweather promotes initial coin offerings, gets sued, settles. Matt Damon promotes crypto.com in 2021, gets mocked mercilessly when crypto crashes. Every celebrity learns they can monetize their following through crypto promotions. Some get caught, most don't. Musk created the market for celebrity crypto manipulation. The platforms enable this systematically. Twitter, X, under Musk's ownership, has eliminated most verification standards. Anyone can purchase verification checkmarks, creating false credibility. Crypto scam accounts impersonate celebrities, promote fake coins, and steal millions. Musk's platform facilitates the manipulation ecosystem he pioneered. He's simultaneously victim and architect of the problem. Regulatory response remains inadequate. Between 2021 and 2025, the SEC brings approximately 50 crypto enforcement actions annually. Most target small-time frauds. High-profile manipulators like Musk remain untouched. The agency lacks resources, jurisdiction, and political will to prosecute billionaires for tweet-based market manipulation. The Dogecoin lawsuit against Musk is dismissed in August 2024, with the judge ruling that his tweets were aspirational, puffery, not actionable fraud. Its legal system has confirmed meme-based market manipulation is legal. Congressional attempts at crypto regulation between 2022 and 2024 fail repeatedly. Democrats want consumer protection. Republicans want innovation, freedom. The political deadlock ensures regulatory paralysis. Meanwhile, market manipulation through social media intensifies. Musk's method becomes the norm. The lessons that should have been learned: regulate social media market manipulation, require disclosure of holdings, impose penalties for pump and dump schemes, remain unlearned. What survived Musk's manipulation empire is the proof of concept. Personal brand is the ultimate financial weapon in the attention economy. Traditional market manipulation required coordination, inside information, or trading advantages. Modern manipulation requires only follower count and willingness to lie. Musk rarely lies explicitly, making him harder to prosecute. But the pattern he established works even with obvious lies. Followers want to believe. Truth is optional. The contemporary equivalents are obvious. Social media influencers monetize attention through product promotions, course sales, and sponsored content. Crypto just makes the monetization more direct and profitable. An influencer with 1 million followers can generate $10 to $50 million through careful crypto pumping. The temptation is overwhelming. The enforcement is negligible. Musk proved the model scales to billions. Everyone smaller is copying it. The unanswered moral questions haunt the system. Is it manipulation when someone shares genuine enthusiasm for an asset they own? How do you distinguish sincere promotion from strategic pumping? Should celebrities be prohibited from discussing investments publicly? The answers remain unclear, creating legal gray zones that manipulators exploit. The fundamental contradiction is unresolved. Modern finance claims to be democratized through apps and social media access. But social media influence creates asymmetric information advantages as exploitable as insider trading. Retail investors following Musk's tweets lose billions. Musk gains billions. The democratization rhetoric masks the reality. Manipulation at scale remains possible, just through different mechanisms. The ghost of Musk's manipulation shapes current markets directly. Crypto traders still monitor his Twitter account. Bitcoin and Dogecoin still react to his tweets, though with diminishing magnitude. The attention economy he weaponized still dominates crypto markets. The regulatory failures he exposed still persist. His empire degraded, but his methods metastasized. The warning for the future is clear. As long as social media platforms allow unlimited reach without disclosure requirements, manipulation through attention will intensify. As long as cryptocurrency markets remain lightly regulated compared to securities, they'll attract manipulators. As long as celebrities face minimal consequences for pumping assets, they'll continue pumping. KWAS first, not last. The pattern repeats with each new technology. NFTs in 2021. Celebrity pumps, drive prices, then collapse, destroys retail investors. AI tokens in 2023. Influencer promotions create temporary manias, then crashes. Meme stocks in 2024. Social media coordination moves prices divorced from fundamentals. The Musk playbook applies universally. Build attention, deploy attention strategically, extract value, deny responsibility. The system Musk pioneered is now the invisible operating system of attention economy finance. Every influencer promotion, every celebrity endorsement, every viral investment trend follows the manipulation template he perfected. We're all living in the market structure Musk built. Most people don't realize it. Those who do either exploit it or lose money to those who exploit it. The choice is binary, manipulator or victim. There is no neutral position. One tweet, 4 words, $50 billion. Elon Musk didn't invent market manipulation. He didn't discover social media influence. He didn't create cryptocurrency volatility. He just synthesized these elements into the most profitable legal manipulation scheme in history. And he did it so openly that calling it fraud sounds absurd. This is the genius and the horror. He manipulated markets on an unprecedented scale while maintaining plausible deniability through the ultimate defense. I was just tweeting. The central paradox defines the entire operation. Musk positioned himself as the people's billionaire, the rebel fighting Wall Street corruption, the champion of retail investors against institutional manipulation. His followers believed he was democratizing finance and empowering ordinary people. Meanwhile, he executed textbook pump and dump schemes, front-ran his own corporate announcements, and extracted billions from the very retail investors who worshipped him. The victims thanked him for the opportunity to lose money. The cult of personality was so complete that exploitation became indistinguishable from empowerment. The pattern he revealed is the new architecture of financial power. Personal brand converts to market-moving influence. Influence converts to wealth. Wealth amplifies brand, creating a self-reinforcing cycle. Traditional finance required capital to make money. Modern attention economy finance requires followers. Musk proved that 200 million Twitter followers create more market power than $200 billion in capital. The alchemy is complete. Attention is wealth, and wealth is attention. The contemporary warning is urgent. Musk's methods are now the standard playbook across crypto, meme stocks, and social media finance. Every influencer with 100,000 followers is running mini Musk operations. Every celebrity endorsement potentially pumps assets the celebrity secretly holds. Every viral investment trend potentially has coordinated manipulation underneath. The infrastructure Musk pioneered, tweet-based market manipulation immune from regulation, has become the dominant mode of retail investor exploitation. What Musk's story tells us about ourselves is uncomfortable. We want to believe billionaires can be on our side. We want to believe that wealth and populism can align. We want to believe that someone with $300 billion cares about retail investors making money. This desire makes us vulnerable to manipulation. Musk didn't create the vulnerability. He just exploited it perfectly. The tweets, the memes, the casual anti-establishment posturing, it's all performance designed to maintain the cult while extracting wealth from believers. The choice facing current actors is stark, but simple. Either regulate social media market manipulation with the same intensity as securities fraud, or accept that exploitation will intensify. Either require disclosure of holdings before public promotions, or acknowledge that celebrity pumping is legal theft. Either enforce penalties severe enough to deter billionaire manipulation, or admit that wealth places people above consequences. Musk tested the regulatory system and found it completely inadequate. Every manipulator who followed learned from his success. Why forgetting this is dangerous. Musk's manipulation will fade from immediate attention as new scandals emerge, but the methods he pioneered are permanent infrastructure now. The next Musk is building followers today. The next manipulation is being planned now. The next wave of retail investors will lose billions to the next influencer who learned from Musk's playbook. The pattern doesn't stop unless the system changes. The system hasn't changed. The pattern continues. The fundamental truth Musk proved: in the attention economy, the person who controls the narrative controls the wealth, not through force, not through superior products, just through the ability to direct attention at scale. He can tweet at 3 a.m. and move billions because billions of people are watching, waiting, hoping that his next tweet will make them rich. The power is voluntary. The exploitation is consensual. The manipulation is participatory. Everyone involved chooses to play. The house always wins. The house is whoever controls the attention. We're not free of Musk's manipulation empire. We're living inside the financial system he helped create, where influence equals power, attention equals wealth, and truth is whatever the person with the largest megaphone claims. The emperor wore no clothes, but he convinced everyone that nakedness was revolutionary fashion, and millions agreed because believing felt better than seeing.